currently the 9th of March, today being a Monday. And in relation to the economic calendar, today we did not have any high impact news. And we're just going to go over this trade that I took during the AM session on the NASDAQ. So we're just going to go through the time frames very briefly. Daily chart right here, and we ended up gapping open during the new week opening gap. So we gapped down towards sell side engagement with the previous monthly low, and we end up engaging with this pool of sell side that resides just right here. So taking a look at the hour 4, I haven't actually updated my charts going into the new week. This cracking correlation is void due to the 1800 opening. So we initially had a cracking correlation with the previous month low, and then we had that buy side deliverance during the previous week's trading, and then sell side deliverance occurred, Wednesday being the high of day, deliverance down towards sell side, and Sunday ends up continuing this sell side delivery motion to engage with the previous monthly low. And what is to be taken a note of is the fact that 1800 opens, deliverance down towards sell side immediately, and then we end up playing around under the new week opening gap. So we see 2 a.m. during London, failure to close inside of the new week opening gap, and then as well for 6 a.m. the failure to close inside of that new week opening gap as well. And what can actually be taken account for is this range altogether as well, which I didn't actually have marked out on the chart. But this range, so from this high down to this low, you have your equilibrium, and then you have your OTE that resides just here. Now, a lot of the framework for today's trade didn't come from the daily or the hour 4. When we come and we take a look at the 1 hour, so what we end up seeing, we have 1800 delivering straight down towards sell side, and then we have Asia forming the low of the day. So we have that low of the day formation, and then we have London open up, utilize this hourly SIBI to deliver back towards buy side, taking a note of the fact that this hourly SIBI ends up displacing above the previous month low, and it provided a devil's mark on the close of the candle, this being a bullish candle. But besides all of that, what I was taking a note of going ahead into the session, there wasn't much framework. It was simply a lot of discretion was used in terms of, okay, what seems right in order for price action to do, and what is the current state of order flow? How is price action currently being delivered? And ultimately, order flow was bullish in terms of we're utilizing this hour 1 SIBI, BISI in a clean, efficient manner, no closure inside of it, as well as the fact that we're seeing the bodies being very respective of the previous month low, utilizing it as support so that we can continue delivering up towards buy side. And then something that caught my eye was the monthly opening. There was a hour 1 SIBI that resided just above it, and this was ultimately the drawn liquidity, and this was where I was looking to exit my trade altogether when I was in long at the 10 a.m. candle. So taking a look at the M15, we have the standard deviation projecting for sell side. We have the -4, -4.5 point of terminus, and this is where we have the Asia low of the day forming for that deliverance up towards buy side. And you have your Asia projection right here from swing low to swing high. We have the -2, -2.5, and the -4, -4.5. And point of terminus is projecting for the new week opening gap high. So just right here, it's just projecting just a little bit under it. And this is, rather clean in terms of looking to target the new week opening gap high. And just taking a look at the price action, we have the consolidation that occurred pre-New York AM and during the New York AM session. We end up having 930 delivering up towards buy side, providing a cracking correlation. And then we have deliverance down towards sell side to clean up all of these relatively equal lows that reside right here. And then we end up finding a point of inception for price action to deliver up towards buy side. So we do have a cracking correlation that resides right here. This would be an M5 cracking correlation. So if we drop down onto the M5, you can see that cracking correlation that provided itself with with ES, and then we have that buy side deliverance towards buy side. So yes, that is quite literally it for that. And then when we are to take a look at the execution itself, so we have the 9:30 opening right here, and we immediately deliver towards buy side. Now, what we should take a note of is the fact that we look at the price action, observe the price action ahead of the 9:30 opening, and we're simply just consolidating orders. We're engineering buy side and sell side ahead of our 9:30 opening. So, in relation to sell side, we have these relatively equal lows here, failure swings right here, and then in relation to buy side, we have these relatively equal highs right here, as well as these highs that reside right here as well. So 9:30 immediately delivers up towards buy side. Kraken correlation presented itself, and there was no standard deviation that I liked that I could project on the Nasdaq to look for a point of inception at sell side to then begin delivering up towards buy side. So in this scenario, I ended up utilizing ES. So ES, there was a 15-second standard deviation and projecting that down towards sell side, and taking into account the fact that we're using ES is the weaker asset in this scenario. So it's the asset that failed to engage with this high, while Nasdaq was the asset to engage with this high. Nasdaq being the stronger asset, ES being the weaker asset. So the standard deviation can be utilized on ES as well to execute a trade on Nasdaq in terms of finding the points of inception for Nasdaq as well. So 9:30 opens, delivering straight towards buy side. There also wasn't sufficient framework as well in order to look for shorts within this segment of price action right here. So dropping down into the 15-second, the price action wasn't all the cleanest. There was simply no framework that I'd seen that was okay for me to say, let me participate in this short move, even a 5-second as well. No sufficient framework. So we end up having that deliverance down towards sell side, and then we have our 9:45 mark, observing price action. And in terms of where price action currently was, price action was under the previous week low. So if we take a look at the 15-minute chart, we have the previous week low right here. Price action is under that previous week low when we're observing this price action right here. So we end up having the first Kraken correlation presenting itself here, and I was willing to enter the trade here. It simply just didn't serve the entries. So we have this Kraken correlation that provided itself right here, and I was looking to get on side with this move if we were to come and engage with this change in sustained delivery, but we don't end up seeing that. We end up seeing price action falling short of engaging with this change in sustained delivery twice. So we have that initial Kraken correlation provided, but failure to engage with the change in sustained delivery. We do engage with the BISI, so it's more than fine to say not look for the entry on the change in state and enter off of the BISI. That is more than fine as well, which is why I was still monitoring this move. So we have that standard deviation projecting for buy side, and the first thing I see is, well, -4, -4.5 is projecting for this high, which is rather clean. And then we have the -2, -2.5 projecting for the first presented fair value gap of the 0930 opening, and that is where we end up reaccumulating our orders. So we engage with the -2, -2.5, and then we have a reaccumulation to redistribute orders. So we have this heavy deliverance down towards sell side, and then we end up providing another Kraken correlation right here. And I was more than willing to enter the trade here again, but there simply just wasn't sufficient enough framework. I would have been looking for a change in stay in delivery, and there wasn't any form of change in stay in delivery, not even on the 5-second, which I'm not going to drop down to. I was looking to see if maybe this low would be engaged with on either the Nasdaq or even on ES as well. So I was monitoring ES to see maybe ES would engage with this low and then can find a nice clean point of inception for that buy side delivery, but that does not end up occurring. So at this point, I'm simply just observing price action and seeing what it's going to do. So we have that Kraken correlation formed, and then we have this inversion right here, which I did not have marked out, but I was paying attention to. So we have this SIBI, and then we end up having price action deliver into it, failure to close above it, and then we have this next candle, failure to close above it as well, and then we have the closure above it right here. So at this point, I'm looking to see if we return back into this SIBI, are we going to utilize it as support to then continue this buy side delivery motion that I am looking to see play out within price? So we end up having this heavy deliverance down towards sell side, and we end up having that Kraken correlation inside of that SIBI that resided right there, and the entry was based off of the 5 seconds. So dropping down into the 5 second, we have that Kraken correlation that provided itself right there. Series of down close candles, series of up close candles, and it was very aggressive. Once again, we have the devil's mark on this candle right here. Can mean one of two things. Price action is very eager, willing to go in a one-sided direction, or it's a form of manipulation. In this case, with the narrative and the framework that we were working with that was in motion, I am observing this as price action is willing to deliver in the direction I'm looking for it to deliver in, which in this case was buy side, because we have this candle being the candle that confirms the change in sustained delivery in a very bullish fashion, offering that devil's mark signature that resides right there. So once we closed above the series of down close candles, then I was in the trade, and standard deviation 5 second, we have that -2, -2.5 standard deviation. We end up seeing that reaccumulation of orders, and we return all the way back down. And this is the thing that I was noticing with today's price action. So just observing it from the ninth, the price action isn't the prettiest. It's not the prettiest price action that we have here during the New York AM. And what we end up having is that the points of reaccumulation, the retracement back down into the range was rather deep. So in terms of this one, we -2, -2.5, we have that reaccumulation of orders, very deep retracement back into this range that delivered in towards buy side. Orders accumulated, then we have the redistribution of the orders, and then this would be its own point of inception. So in relation to market maker models, this is your low risk buy. So where I entered off of would be referred to as your low risk buy. But in terms of fractalizing the market maker models, this is also its own respective point of inception, because every higher time frame retracement is going to, once the retracement is over, it's going to serve as a point of inception for continuation on the lower time frame. So when I say higher time frame, we are observing the 1 minute right now, but when we are looking at the 5 second time frame, the 1 minute would be considered a higher time frame to the 5 second time frame. So this sole candle, the 1021 candle, is a higher time frame retracement in relation to the 5 second fractal, and point of inception occurred for it inside of this inversion right here. Yeah, so that's about it. In terms of like, if I wanted a different entry, I could have entered off of the M1 and had my stop loss just right here. Only reason for not doing so is because I wasn't quite sure if this was the trade idea that I wanted to see. I wanted to see signatures present themselves on the lower fractals to confirm what I'm looking to see occur on the higher time frames, because initially the plan of action or plan in mind was to see this pool of sell side be engaged with for a cleaner point of inception to occur. But when we look back to the left side of the curve, it's very messy price action, very, very messy price action. So 5 second change in sustained delivery, and then we have that 5 second standard deviation. We have that -2, -2.5 inside the first presentation. Come back down to reaccumulate orders inside of this M1 order block. No closure below the mean threshold of this order block, utilizing in a rather efficient fashion. And then we have the inversion of the SIBI right here, which delivered into this order block. And then we can see how that is being utilized in an efficient manner as well. Deliverance up towards buy side, engagement with this high, but mainly the closure above the first presentation, and we end up utilizing that as support to continue the motion up towards buy side. And at this point, price action is residing inside of the current new week opening gap, which is rather large, and this is why we end up seeing this type of high resistance price action. This trade elapsed for almost 2 hours, so the trade almost, well, technically point of take profit, yeah, 2 hours was where the trade basically 2 hours was the length of this trade altogether. So once we are digging deep into the new week opening gap, we end up seeing price action stalling and moving in a rather lethargic fashion. Just high resistance to liquidity run all the way up towards the buy side. We're seeing a lack of imbalances being presented here. We don't even see any imbalances, just giving it a glance. There's no bullish imbalances that are being printed during the course of this price action. Now, the first question one would ask themselves is why, where, how, X, Y, and Z. what we take a notice to is the fact that if I do even, what is that background, how do I do this again? Yeah, so the orange line, this would be your new week opening gap layered out in quadrants. So we see when we are under the equilibrium of the new week opening gap, we are having a rather low resistance run all the way up until the premium half of the new week opening gap. And the moment we end up closing above the equilibrium, this is when the price action begins to turn high resistance. But what I was taking a notice of is the fact that for one, we are at the -2, -2.5s of the M1 standard deviations, as well as the fact that we were utilizing the equilibrium of the new week opening gap in a supportive manner. So we're seeing no closure below the new week opening gap equilibrium right here. So price action being very respective, bodies being very respective of the equilibrium right there. And then we continue delivering up towards the buy side. And ultimately, where I was looking to collapse my trade initially, because in the execution video, I'm pretty sure I had my take profit residing right here, which is at the previous settlement. And I really like this, to be quite honest, because the previous settlement resided just under the new week opening gap high. So a lot of gaps residing here. We have the previous settlement gap, and then you have the new week opening gap, essentially just voids of price action. So for it to go onto the regular trading hours, we have that void right here, and then we also have the new week opening gap overlapping with that as well. So very, very clean, and as well as the fact that the standard deviations were also in alignment with it. And then I ultimately ended up moving the take profit to the monthly opening because I took a notice of the hour one. I'm looking at this hour one SIBI that resided just above the monthly opening, as well as the fact that the monthly opening was its own chaotic new week opening gap as well. So we have the monthly opening right here, and then going all the way back to where it opened, we have this new week opening gap that resides right here, which was rather chaotic. It was very large as well. So that is ultimately why I looked to extend the take profit to the monthly opening. And in terms of when I actually exited the trade, so this was based on like a time-based exit as well, since we were approaching the lunch hour. So when I exited the trade was 11:59, and what we had ended up doing is engaging with the previous settlement. So what I would have liked to see is a candle like this right here. So the 1203 candle was what I was anticipating to see so that I could end up getting out of my trade. I wanted to see price action just completely spike right through the previous settlement, right through the new week opening gap high, and engaging with the monthly opening as well as that hour one SIBI. But we end up engaging with that previous settlement, and it's a down close candle. And then I ultimately just decided to close the trade just on this candle ahead of the New York lunch because I wasn't willing to sit in a longer consolidation, to be quite honest. The trade had already delivered more than enough, and the fashion that we were printing in, if we were to then come back and turn around on price action, we were going to do it in a low resistance manner. Reason why being is because this is all high resistance. We're simply just engineering sell side all around here. And even more of the fact that we're engineering is that we have the 11 o'clock opening residing right here, which resides just above the equilibrium of the new week opening gap. So devil's mark just above the new week opening gap. I'm gonna have to bring this up again. We have the equilibrium of the new week opening gap, devil's mark for that hourly candle, no price action under it. So ultimately just decided I'm going to collapse the trade. We've already engaged with the previous settlement, and we are at a point of terminus. So -4, -4.5 residing right here. Yeah, that was basically just it in relation to the trade. So we end up doing that spike right here, failure to engage with the monthly opening. I'm looking at that like simply the engineering of buy side. We're during the lunch hour, we can see we're simply just accumulating orders. The highs are lower than the previous highs. So high, lower high, lower high, lower high, and then we have devil's mark once again, signature, deliverance up towards buy side, and then we slam right through it just right there. And yeah, that is quite literally it for the trade.